Our first question is, what are the investors and accelerators' perspective on the African startup space in 2025 last year? So very interesting year. We saw that investment rebounded in 2025 after fairly slow years in 2024 and 2023, but we're still not at the peak that we saw in 2021 around the 6 billion level. So, panel, what say you? Is your glass half empty? Is your glass half full?
For me, I think it's a mixture of a number of things. Firstly, when you look at it from a financial perspective, people, fund providers now are able to earn money from different ventures. It's no longer a zero interest rate policy. And so what you have to understand is that beyond valuations dropping, there's now that opportunity cost in taking a bet in a startup or having guaranteed return. And so what you're going to see, most people try and chase guaranteed returns in an increasingly volatile environment. That it doesn't mean that they're not going to invest. And you see quite a number of people doing great things that are getting money still at the end of the day. And the Terra guys in Abuja, I'm not sure, yes, the guys that do the drones, for example, at the tail end of the year, were able to raise $11.75 billion. You see people doing hard check raising money. And so it's something where there's a slight shift, but we'll be able to talk about why that shift has happened later.
Oh, for sure, for sure. And I think it's interesting as well where you're saying people are trying to find more guaranteed investments and maybe unit economics has become more prevalent. Um,
Is it mainly what sectors is, where have you seen growth in 2025? Is it more sector specific, sector focused, and geographies? Remember, the African continent is 54 countries, right? But is money still flowing into the usual suspects?
The dynamic has
think-
changed.
Yeah.
I think particularly in Nigeria hasn't received, it's actually been falling in terms of the volume.
Yeah.
And the reason is a lot of people piled money into Nigeria thinking about the number of people, the population, but the market size. But when you look at the actual market size, it's actually really small. So we have the population, but do we have the buying power? And when you also look at the fact that they have a number of misbehaving founders, it then puts people up.
Yeah.
And so what you're saying is more people are trying to invest in, say, in hard tech, things that I'm able to see where my money is going into.
Yeah.
And so you see things like the Amal, that there's some chip makers in Nigeria that are also getting money. You're seeing people doing that, actually changing the world. Mobility guys. I've seen a number of mobility planes in Nigeria.
Yeah. And there's a whole big market opening up for particularly e-vehicles, right?
Yes.
Which a number of the investors I know are really building that partnership between China, which is, is awash with it, and actually finding ways of bringing that into the Nigerian market. Yeah, for me, the investment it's also about how much is it that we are investing that enables the manufacturing, whether it's drones, whether it's e-vehicles, how much, because that's where it's in that value chain where you have job creation. And I wonder how investors are they looking purely for exits? How quickly can I exit from this in 3-5 years? Or are they looking for a long-term patient capital?
Can I bring that in?
So sorry, Henry.
Sure. Go for it. Beyond the sector specific analysis, there's something that we also need to. So forget the 2021, 2022, liquidity overpricing that we enjoyed. What is happening now? And if you look at the past few years, you'd see that debts and quasi debts, vehicles and structures are gaining momentum, right? So if you look at what's happening, and you look at the fact that a lot more deals are being done using these vehicles, what I think is happening is a price correction. I think we've had the days where, as a founder, you would raise money with just narrative, just hanging on the back of Africa Rising or other such kumbaya narratives. It's just it's gone, right? Taking us all back to the actual. So there is the point that's been made on the sector specific differences, and that's valid. I think there's a point that Ope made earlier as well with regards to, the benefits we enjoyed in 2021, 2022, which I think is more like a bubble. But the reality is what's happening now, and the big signals to what I'm about to say is the fact that debt and, the vehicles of this nature with a lot of emphasis on guarantees and revenue-based financing is gaining momentum, is actually a reprisal, right? It's a reaction. The ecosystem is reacting to, valuations that are not realistic. And my analysis is not going to try to point blames at anybody, right? It's just a mismatch.
Sure.
So whether this mismatch has happened as a result of the fact that the majority of the investment has come from foreign money, who have come in with their own pricing mechanism, with their own analysis or assessment of the market and models, and that reality has not matched the reality of the market.
Sure.
Or whether it's also the fact that we've had founders who have
get rich quick mentality.
There is that.
Sorry.
There is that.
Yeah.
And there's also the fact that we have founders who are able to spin narratives that actually, so there could be the intent or the intention to actually deliver on those narratives. But once you begin to understand that you're able to spin this narrative in this way, and it gives you distraction, that becomes it's no longer a means to an end, it becomes the end in itself.
Sure.
And so we have these things, this factors, converging to give us this prized ecosystem, which is what's now happening. It's been corrected. So I think it's a good thing eventually, because what's going to happen is, because look at it this way, there's a second component to your question that I want to highlight. The majority of the money that goes into the continent comes from outside. We need domestic money.
Absolutely.
We need local capital. And we know that local capital isn't going to be enough. So we need a hybrid system. We need foreign money to come in, but we need local capital to play a very strong role as well. We need the blend. And at the heart of that blend would be underwriting, how we price, how we assess risk. And if we don't do this well and lead on with realistic localized models, this mismatch would not just be a signal, the short-term signal, but becomes like a key feature of our ecosystem, and it could be dangerous.
Sure. No, it's like you said, hybrid instruments, hybrid investment vehicles are always important. So I completely understand. What I was just going to mention is because a little while ago, outside of this, we talked about maybe a lack of fundable investment opportunities too. And when we're talking about the ecosystem being overpriced and systems in general, I just want to get your thoughts on this. If you still think there's these lack of investment opportunities that are around, or if there's a mismatch between investment opportunities that are being presented and investors and accelerators that are maybe analyzing and assessing opportunities.
I think before, I just want to return, I agree with all of the 2021 to 2022 bubble, and it burst, and we're in but 2025 was a reset, it's a redesign of the investor ecosystem as well. And I don't think we can negate the fact that there's a new world order, that the geopolitics has played a significant role in that. We've had a major shift in America in January 2025 with the election of Trump, and his, he's on a roll to disrupt everything, right? And I've seen the emergence of BRICS and the positioning of Africa and the African continent as part of G20. And so I'm wondering whether, as part of that redesign, guys, when you talk about foreign money coming into the African continent, we only think about the diaspora and we think about EFIs in the kind of Western markets. I just wonder now whether it's going to be more going forward, the role of the South-South collaboration, that actually, are we going to be able to get investors coming in from Brazil, from India, from Latin America, from various, as real investors, Singapore, rather than just sovereign funds like we have in China in terms of infrastructure investment?
It's a really great question you've asked, and it ties into what Henry has mentioned. For us, what we see so far is money and investment as the quadrants of geopolitics. And so that dichotomy, you see the West and then you see the East coming together. They are trying to calm fiefdom, if you may, within Africa, and they know that they are able to do that with money. So then they're doing that with smart money. They're not just throwing money around. Again, money is expensive. So they're going to go in with quasi debt, eventually maybe convertible. They want to go in with equity, but they want to perform first and foremost on debt. And there's only so far I can put in terms of security I can put on receivables. And that's why you're seeing a pivot to hard tech. And then in terms of what they're also funding, drones, for example, even though some of the purported use of these drones are for civilian use, but at the end of the day, it's also an armament race.
Absolutely.
And this is also going back to cheap technology. It's expensive to build in the United States. It's easier to build in Africa. Labor is cheap. Material is somewhat cheap. And so you're starting to see the money coming from that perspective.
From America.
From China. So what you're saying, what we've come across, just as a side note, I don't only do venture capital deals, I also do a bit of private equity. And what we're seeing a bit of these guys coming in for food security purposes, for critical infrastructure. So they're being targeted right now.
So I've got to stop now. 12 minutes have elapsed.
Okay.
I'm sure we can continue this question. We'll be speaking about foreign investment as well very shortly, so we can continue this question in a little while. But Osahon, I just want to bring you in. There's quite a bit of talk that we had regarding foreign investment, regarding debt instruments and the investor's perspective. As a founder yourself, the person that's worked across Nigeria and the West, what are your thoughts on what we just said so far?
Thank you very much, TJ. I mean, this is a very important question, and everybody has spoken and said a great deal of what the reality in the market is. And again, we need to begin to look internally, right, and begin to see the market for what it is. Lots of investments have come in, but have we been able to say that these investments have done really well? No, because the model that was used is not the African model. The Silicon Valley model is actually not the model that Lagos needs, that Nairobi needs, right? We need to understand clearly what kind of model these markets do need. And I'll just give an example. A friend of mine in a major record label in Nigeria was telling me, say, the whole projections around Afrobeat in the world is not panning out the way it was expected. Right, because we need to really we need to take a look at this thing critically. The market size, the real market size in Nigeria probably is just the population of Lagos and Abuja and Port Harcourt, right? Are we able to say this market is, we have 200 million people, but the customers for the 10 people is not 200 million. We need to be able to size the market correctly, right? So that's one of the things I think we need to do, size the market correctly, and we need to begin to look internally. We need to begin to set up policies, not just policies that are very nice and set up in a way that it makes a lot of sense, but policies that actually do interpret to real value and is backed by real funds to drive these policies, right? Government has to be looking at this. So we need to also look at impact investing in the long term. So the VC model is not going to work for a very nascent ecosystem like the Africa's ecosystem. We need to begin to think about this from an impact investment point of view, right? And not just focusing on exits. Exits are important. I mean, every investor wants to understand where the exits is going to come from. But I don't think we have that kind of market yet, right? There has to be some building block. There has to be some level of foundational infrastructural work that has to be done.